This is another day. It is a bank holiday test reading. Send that link to this guys so they can join. So today we are just reading price action. We want to see how far we have come, we have learned so far, and how we can apply these concepts. Basically, we'll start with the monthly time frame to remove all the indicators. The indicator. So on a monthly time frame, we've just taken out the previous monthly high. Okay. I hope we have it on chart. This previous monthly high should be, let me make it ready. I leave out my annotations on because they literally guide me on I'm reading and tape reading. So excuse me for that disorganized chart. So we can literally just leave it like that, but make it big for a monthly variable. Can we make it 4? Yeah. So we've taken out this previous monthly high. So we are watching price action from this peak. Okay. Do we have those levels? Square encroachment, equilibrium. We do have them. So how will this month close? Should we close above? Or are we going to start putting a monthly week? We don't know. A weekly time frame? Weekly time frame. This is just Monday. But we literally want to erase all the losses that we made on Tuesday. If Monday wants to completely take out all the previous weeks, could be probably because it's a bank holiday. That's not clear on a daily time frame. Now, on a daily, this is so interesting. We say this we are from delivering from a higher time key level. We want this to close above today. If today closes above and we completely disrespect this inversion, this daily inversion, then our targets will now start to look up here on this FVG. But it depends on day's closure. Today is the bank holiday. But well, also we could tap well to take out this week high and we close below. We close below here, then we are going to see lower prices for the week. So today is literally setting the pace for the whole week. It's daily 1 hour. So basically this has already gone so up 1 hour for a Monday and a bank holiday. And this happened during Asia session. 1 hour time frame, see what's happening. We have some sell side resting up here, extra sell side resting up here. So ideally, I would want this to come and get support from this FBG right here. I want to take out all this. You see, the challenge is that all candles are higher, taking out all highs, but literally respecting the bullish momentum. Price actually has been bullish. So if we can take out this, then we can continue, yeah? Bullish trend. Looking at Monday, it's gonna be a tricky money today. When we see the 1 hour time frame, we want to see does it give us a chance before it can take out this or before reaching the previous monthly high. We could see shorts from there. We don't want, if we are bearish, we don't want to reach 50% of this inversion, this fair value gap. We will see if we can sell from here, come and buy more from here, or around here. Because literally we are in the midpoint of the weekly. We are above. When you look at the weekly equilibrium, we are literally in premium of the previous weekly range. Too expensive to buy. We need to go a little bit so we can buy more. Now, let's go to the 1 minute and see what has happened in the session. So, we have daily FVG high right here. We have this is our 1 hour FVG. And see we can have this sell side resting here. This could be a potential turning point and to go higher. If we've taken out Monday's today, this is the high of London. If you have taken out the high of London, I don't have these levels on. I need to have them on. We need to have the London buy side on our chart. London buy side. So we have literally left a lot of stop hands liquidity down here. This is our Asia, not London substance. Make this a little bit short, small, so they don't want to crowd our charts. We have to go lower We'll see how price will behave at these liquidity points. Do we need area? Well, area is the daily FVG. We still need it. But here we'll just this. We can call it Asia. Asia buy side. Notice how it supported price to go higher. Let's make it small. We also need, if we are to go lower today, these are our targets down here. London buy side and Asia means sell side. High probability targets, but we don't know how the daily candle is gonna form. We really don't know. Are we closing bullish? Are we closing bearish? Now that's the story we are going to find out from this session. That is how price actually is getting support from this London buy side when the session opens. So we usually have a lot of sell stops, sell side down here. And if we look at market structure, market structure, market structure, we have taken London buy side. Just case we want to take it with we want to take this. Okay, I'm gonna label this minor sell side, minor buy side with a body candle closure, not this rejection. So 920, like our minor buy side. Okay. Have some sell side here. We have some sell side here. This is minor. And we have more sell sides down. The all potential targets. It came up. Notice how this week can reach the midpoint of this week. Let us watch how it goes above. We are below this slope and put in a week, and then we'll see if we are better by side. Another level here, this is the level if we are to go up a bit. You see, 1 hour, high probability targets. One up here, and then this liquidity here, and cut this high, your sell side. That's like major buy side. How this kind of closes is so important. If it closes below, then we are good for our prices. Closes bearish without a week. It will be good for our prices. See, want to see how sell side here, also how sell side below this range. Mm, so see where we closed yesterday and see where we are right now. So we are literally in a deep premium. So it doesn't make sense for us to say buying this price action. So this is our opening range gap low. This is orange. I think if I take this, we'll take it to where market will open. This will be our opening gap at 10:30 opening price. And gap high. High. Yep. In the first 30 minutes of market opening, we'll be targeting a midpoint of this range of electronic. So this is the gap low. See the previous settlement price and where we are right now. We are so this was for the other week, so we don't need this. Then this one needs. We do not need this. This was great. So now have the opening range gap low. Need to be a little bit bigger. Let's make it just not dotted. Apply. At 9:30. We want to target midpoint, and midpoint is where we're targeting Asia lows. So for the session, we are looking for sales. Okay. Looking for sales until we reach the Asia lows. So this one is gonna be carried to the 9:30 opening price. Waiting for 9:30's opening price. Take this. Yeah. 9:30 open. Let's come and clear up all this. So tired. been reading the whole money section. I try to pick tops, not try to pick bottoms. Have some right. Not to pick highs up here. So we are watching how market opens. It's bold. So this one will come at the candle which makes dots. Have a lot of liquidity. It's downside. It's too expensive to buy. We shall at least target Angelos, then we can buy from the Angelos. So reading price action. When you see we take London highs, we need to effect cause above London highs. Where is our market structure shift? Our market structure shift happens right here. Okay. Now this low, the price is talking about this low. When this cap remain open, or we take out this. The time is wrong. Literally come and take that low. Maybe that we can always go back until then. It could be our once we take sell side, we can always go back. Now when we are here, we don't want to participate when we're in OTE of that range because price can go either up or down from this point. That's why we wait for this law to be put in. Okay? Once this law is taken, that will be our market structure shift. This law want to see down close candles, like heavy candles to come and take this law, take this law, this law. Heavy momentum. See that talks about this. If you were here, how would you not get involved? You would see this rejection from this fair value gap and see this immediate rejection. Wait for a lot to be put in, and it come back and still reject this. This is a price action. You can now look for shorts. So with my internet, my chat's blank. So that chat's showing. What is happening? So I think 1 second, let me fix my internet. Just fix my internet. See, is it back? So my internet. Like, think we are back, are we? Yep, we are back. Oh, we just missed the opening price. Oh, we took sell side. Oh, it is so heavy. So this is 9:30. Opening price is well. And here, the thing we want to do is to see where are we in the opening range gap so that we can confirm trades. Hmm. So these candles 9:31 show, but 9:31 will definitely show. Let's go back to electronic trading hours. This is 9:30 opening price. So we take this buy side here. There is low. Now the first presented fair value gap. This is our first presented fair value gap. Targets up. Yeah, we do have targets up. Now the new day opening gap. Why? We are sweet. Let's move very high. Oh, let's watch. So we first took minus sell side, then we took buy side. But because it is too expensive to buy, the first presented fair value gap. London buy side. See and observe how price behaves here. And when it comes back, we're just trading on major sell side just above the previous monthly high. Let's see if we now have our opening range gap. Why my candles are not showing? Showing the price. Okay. So we have, when you see this momentum with this, you know what that means. Remember, I told you we want our signature is always we take out the session high. This kind of takes out a session high, we take it out. We're interested in knowing how price action literally behaves around this point. I always name this inversion after buy side. Yes. So we see these thick down cross candles. So How does this candle behave? Does it immediately rebalance? If this candle is bearish, we can be sure that we are going to reach the first presented value gap. If we feel the same pattern, we are 100% sure that we are reaching here. Okay? We are literally watching price action. And this will support us to go lower. Because situations are still low. Our short position on P. Mhm. Oh, watch this candle. How are we reacting? Don't want it to close and reach above. Yeah, want it to completely dismantle all this. And will be so good if it closes below. So also watching this fair value gap. This one and this one is so important. How we fail. Now this candle, if it first close above here, the intention is still low. We want it to flip. Does it flip bearish? Support low prices, or does it still go up? And becomes our order block right here. We're watching, we don't want it to go above 50%, but we want it to rip through and become an attack Asia sells. We are bearish for that session because of the past 30 minutes we want to attack buy side, at least up in Asia lows. This gives us courage, you know? Right. If we completely disrespect this price action, next target is this previous monthly high, where we will see significant. So right now we are in the middle of nowhere. Indecision candle. This one we are validating this inversion. We break below these lows. Want to see momentum. Each low, consecutive block is lower than the other. But here we are making equal lows. However, up, each low is less than the other. We keep breaking the lows. Small things you want to be looking at in trading price action. It's too expensive to buy. Stay out. The time we had to buy was here, but would also be interested in buying from here. You see how each consecutive high and low is lower than the other. There's the rejection here. Even there is also another rejection here. What does the 15 seconds chart look like? This point, that's when the 15 seconds chart comes in. Smart money is building their positions right here. That is a sign that we are about to start dropping lower. Smart money is building their positions here. So are they building them to go higher or to go lower? Let's look at the 15 seconds chart. See, let's see. I think we are good for shorts. If 1 minute closes below, still holding, but should it fly? Price action can fly from here. Smart money, every retracement they buy. When you sit and do nothing, want this candle to close bearish. Want close below this backside. Also, we don't know what's presented variable gap will do. If we are in shorts, this would be an aggressive short management, but we also want to be in shorts once we close below. This could be like smart manage accumulating positions to go high. Look at moving everything, and you look at 1 hour. See that? And so bullish. Yeah, this is when you stay. This one is our order block. Don't want it to, we want it to remain in the lower half. Don't want it to go up. Go up, then we are on the wrong side of the market. We know that we are on the wrong side of the market. If we start trading in the upper half of that order block, so we're still in the lower half. We close below this to act as a propulsion block to take us lower. This is literally holding us. We reject and close above here. Our next target. That's not really high. But ideally, what I would want is to come and take this sell side. Also, this sell side. Oh, this is it. Yeah, I would go for a short. Depending on how this kind of closes, let's see. We want it on bearish. Short work. Let's wait for at least a market structure shift. With the shorts. This remain a black anchor. We are long. Let us long from the first presented gap. It's too expensive to buy. too expensive to buy, and we don't have where to shop from. This was when we couldn't buy. We were not on the charts here. Do we see like tab and fly? And tab and fly? The 15 seconds chart. See that? We are literally not inside that more. Yeah, we started dropping. Now we have started climbing. So really, this is when precious literally pays. Tuesday's low. We move from here to here. What we want to say, do we tap and fly? Or do we tap and crawl? The signatures we observe. It is a little retracements, but we want to see momentum. We want to see momentum. If this candle has taken buy side, we want to see market structure should right here. We want it to stay in the lower half. Are we ready to go lower? Too expensive to buy? Sales would make more sense. It's just too bullish also. You want to buy below Asia lows. This huge momentum was a manipulation for what go on. That is how we erase all of it. And we stay below this low. Want to see now some 950 macro. Want to see we break below this. And we go for shorts. This in value and support has to go lower. Ah, that's up to where? Yeah. We want to double this short up to and then those. This is where we will be shorting from. Okay. With the short. Are we shorting? The market structure shift to a macro. 2 seconds, what does it say? Stop loss set. Law of London. Now, back below, we don't want to see it again go above. Okay. I want to see that kind of price action. I want to see tap and fly. We don't want this kind of we take this low, this could be your entry point. Oh, this is the market structure sheet. OTE. Now we see down close candles below this low afterwards. That's what we want to see. Okay. That will be our ideal kind of price action. Okay. Market structure shift. OTE. We look for any key level in OTE, which is our inversion in this case. How do you feel? You record every feeling you're having. I feel like it's not gonna work out. I feel like even when I'm not in a trade. So ICT tells us to record those feelings. And this is our market structure shift right here. We want to see a breakaway gap happen here. Let me just move this in. If you're not in a trade, this would be an ideal point. We don't want it to go above this version high. Well, we could go, but we don't want it. And we want it to stay below and then buy side. So this level is so important here. We watch price. Our first TP would be at this first presented very graph. The down cross candles will start coming when we take this low. We will see what we call big down close candles. Big down close candles. This is where we would want to add into our position now. Okay. And so we take this, but we also take note of this place. This first presented fair value graph. We close below it. Hmm? Does it act as support? We first remove them. This is our trade. Okay. The moment we close below this, we want to see big down close candles rip through with the momentum. Now here is our TP1. If you took 3 contracts, this is TP1. Told you big down close candles incoming. You can see these candles from the in seconds. Yeah, like we wanted to see big down close candles incoming. And the TP1 is hit. We want to observe how price action reacts at this first presented fair value gap. Okay. This is does it support price to go lower? I'm watching it. You see how the upper part got 1 minute. I think it's gonna take us lower. We hit TP1. This is TP2. TP2. With this volume imbalances that we are creating in. Remember I told you this is our inversion after buy side. This is where we're buying from. So with this volume imbalance, we are that we're on the right side of the market. Okay. We just want it to close below. If we fail, so closure below and want it to act as support. Take us lower, further lower. We are at least targeting 50% of this opening range gap. We could have a reaction here when we actually going until $8 because literally price action has been what? So bullish. Now let's put this one here. So this level is so important. We could turn around from here. At this point, you want to be break even. This inversion is always so important because it is the first inversion after we've taken buy side. Look, notice how this London buy side supports price. Notice when price comes back, this London buy side, we want it to support price to go low if we are bearish. Okay. Now this first presented level gap, we want to project it higher and higher. The TP1 is hit. Does it take us out at break even again? Notice that kind of momentum. So now we have no direction, but we want TP2, TP2 right here. And TP2, you always watch, it will go deep. You don't want to immediately take TP2 when it comes here. You want it to come. Our big down cross candles always happen here. And this is the point where I told you anticipate breakaway gaps. You want this upper part to remain unfilled. If this remains unfilled, we are good for lower prices. Yes. But if it does not act as a breakaway gap, then we are doomed. I want to remove this indicator right here. So here is where smart money can now come in. And it is always a decision point. Every time you take buy side, we request OTE of the range. My charge. Give me a second. Oh, that is just stepping price action, not pulling the trigger, just going in and watching what the price is doing. Okay. Literally, that is what we are doing today. So we want to see this. We want this part to remain unfilled. I told you that's where breakaway gap happened. OTP1 was at this inversion. TP2, P2 is right down here. So we are watching and watching. How do we perform? Remember, big down cross candles. Well, so we want that thing to take us lower. Okay. After we take buy side, we can sell up to OTE of the range. But when we see these multiple rejections, that's when we start to think twice. Okay. Are we on the right side of the market? Do we have momentum? Then we are going for this relative equal highs up here. Okay. Because the price action has been literally bullish the whole day. I'm gonna remove this order block. Really acted as an order. So you see the perfect part. You would engage price action. Would literally be on the 15 seconds after we have filled this inversion. Then you would get like you got the 15 seconds chart. 15 seconds chart. This gap level is not so good. So this is where we had market structure shift. The moment we feel this, you go short after, immediately after here. The stop loss, ideally, should have been our buying, and stop loss should be just above this inversion. If you took profits, then this would be a 2R. But for holding on to purposes, so we watch price action here. This is a decision point. Either we are going lower from there or we are going higher from there. This inversion will determine this first presented fair value gap will always determine. But I want it to go lower because it is too expensive to buy. You buy something that is expensive. No. We will buy it after we reached Asia lows because it was too expensive to buy. So this kind of rejection is building up something. You see, each candle, high, this is lower high, higher high. Apart from this one, if okay, let's see if we can put in an order block. If we close above this one, we expect it to support it higher. If we close below this, now if this kind of close is bearish, then we expect what? Big down close candles incoming. Okay? We want it to close below. And when we close below, perfect. We want immediate rebalance. Tap and reject, then we can add more positions and we can trade our stop loss up to the Asia lows. And most times you don't want to take at the exact time. If it is to go lower, you want it a bit lower. So we want to watch if we get immediate rebalance. Does it tap the wick of the previous candle and does it reject to go higher? We want it to stay below the upper half of this inversion. As the price stay below the upper half, once it fills in, we tap and fly from here. Where we can go to the 15 seconds chart and see how is its reaction. How is its reaction? Do we stay below? Look at that. Reject it. But we want it to reject with momentum. We immediately reject it, but we are fading. Even when we impulsively go up, notice how we have momentum down. Now these gaps, we see a gap lower, then we are so happy that, you know what, we are good to go and we are going to eat and pocket some dollars today. You see how this is immediately reject, and now we can add some more positions right here. Where would our stop loss be? If we are correct, we wouldn't want price to come and take out that before it reaches up here. See if we are correct. Because of total disrespect of this inversion, this one can act as inversion, can act as what? This is our first trade right here. Second trade is from this inversion. This would have been this inversion, yes. So now we wait either for TP or stop loss. Game of probabilities. You to notice from this point here, How each candle's low is consecutively lower than the other candle's low. And this momentum continue even up here. Do we respect that? Or do we start to break the highs? Notice that candle where it stops. Does it go above the other candle? We don't want it to go above. The volume imbalance shows us that we are literally dropping, but we do not want it. We can go up, but we don't want it. We will be so confident in our trade. But if we start to go up, but this is also a turning point. This is the discount of the range from this high to this low. We could turn around from there. Another turning point for price. And this consolidation. This is another target. Price is building targets. We watch. If you took like such an entry, you would want to go break even because this is an aggressive late entry. You don't want to sell when it is too cheap. From this low to this high, here it is too expensive to buy. Here it is too cheap to sell. So here you don't want to do it. You want to buy here, you want to sell up here. That's the logic. Why we buy here? Because we are expecting, after validating this environment, we are expecting it to push us lower. And at least we can take out London. If we can take on London sell side. Before we go a bit lower, we want to see if we can take out London sell side. That's the logic. And that if we are to go below this low, we want to hold at least holding capacity. And if we don't have targets, see this fib, measure from this low, this low to this high, and so want to see, we want to hold at least one standard deviation from this range high to this low. Okay, one standard deviation from here. So in this case, see, yeah, let's here where we want to hold up to, or we take off our positions. Because it is bank holiday, don't expect much. And we have in going up, we literally don't know how this daily candle is gonna end. We don't want this kind to visit that FBG again. When we're just watching price action. So at this point, this remained unfilled. So we're expecting a little bit lower price that is not here. When this happens, you wait for this one to be taken out. If it is to reverse, just reverse from there with equal lows. See the logic? Is a what? Equal lows here. Well, we can't tell, but it can reverse. This is price. It does what it does. When they're equals, you can decide to just go up. So we don't want it to go above this upper half of that first presented fair value gap. Going above, then we kill all our trades. What we want, this is the key price signature this week with this candle. We want it to close below because this is like a support, strong support level. This one, this signature here, we want to close below. When we close below, we'll see down close candles. We want this to be immediate closure below. Watching, how do you feel? Like a trade is going against you? Feel like your analysis is wrong? Yeah, at this point, I feel like I don't know how price is going. I don't know whether I should hold if I was in a trade or I should not. I'm just watching, and I think if I was in a trade, I would be taking out all my positions because I want to see this kind of price action. I want it to be one-sided. Now, that's a drop. It's perfect. We are ready. We want to see it not come above this week. So we trade all our stop loss above this week. Even we don't want it to come above this week. If it comes above this week, then we know that the trade is not gonna work out. What time is it? This is 10. This is 10 macro. You see how we are at this week of consequent encroachment. If we can stay below the week's consequent encroachment, then we are good to go. We don't want the week to go above the week like that and close above. That will show us that, you know what, price action is weak. It's no longer interested in going what? Down. If we start closing above week, we expect it to close below. But the point is the FVG. Have we taken any buy side? Sell side? Are we turning around? These are the few questions we keep asking ourselves. So we could come, take this buy side, and then drop. When we take this, close above the first presented level gap, we kill the trade. So we have this big inversion right here. We are watching price. Put it to buy here. Expensive. That's the decision point. We don't want to close up. We are on the right side of the market. If we close above, we are on the wrong side of the market. According to ICT, once we put in a low, like right here, high, and a low, when we break this low, we wait for this one to be put in like this. This we expect it to be a breakout gap and a drop lower. That's when we expect down close candles to candle. Now here we have some buy side up here, and the yeah, I think that's available for instance. Some down close candles. This is an indicator that price is struggling to go down. Right? Anytime we can take out this high at this opening range gap high and just fly. Demand is sometimes they seem to move one-sided. But having tapered from here to right here is good progress. Oh yeah, creating relative equal highs. So we may go up, build to create these targets for the later session, then take this buy side into this breakaway gap and then drop later on. So we will see retracements like this going up, even closing above the first presented every gap. That's also another scenario. Now, when you see this momentum, you start to void your and expect it to be taken out. The momentum down. Let's assume we've taken sell side. Let us see some momentum to take out all this. That's the funny thing with price action. Now, when this ends, going to be so clear at the end of the session, you will see so many opportunities that you will get in. Well, here I saw this buy side, but I didn't trust it. I thought we would first take buy side, come take this, then we just went up. After this session, you're going to see better opportunities and be like, wow, could have entered here, could have entered here, could have entered here. Now, this is nice. We want us to close below. We don't want price to consolidate in a fair value gap. We don't like to see price consolidate. Well, that's not a good sign. This happens. We know that we will take this low, we also take the high. We will give the right direction. So if we take the low first, then we are bullish. If we take the high first, then we are bearish. Don't like to see this kind of consolidation in a fair value gap. What we want to see. So we are claiming our inversion. We are reclaiming our inversion. What's the time? 10:20. That's the macro. Hey, told you these are equal laws. Never buy. Eh? This is the momentum we wanted. Yeah. Now we want to see a fair value gap form. Like I told you, we want to see a breakaway gap. A breakaway gap, so that when we're equal, nearing what? This is our turning point. This is okay. Momentum has been reached and our intentions are met. Price action can turn from here, or we can now expect, if we are still going low, okay, big down close candles incoming, okay, like until we take out all this liquidity here. Let us watch. That's why we could not long. Now, if here gives us a long signature, this is a good place to long from if we get confirmation. Oh, what would be our confirmation? Just like taken, we are booked from above here. We don't need this scrolling our chart. This one is needed. This one is needed. So if we have a bullish engulfing, remember this is a key level, the opening gap high. So the key level. Now we see that kind of going imbalance is what we don't want to see. We want it, if we are bearish, to go lower. We try to put in, we have failed to put in a new variant. Well, we found a fair value gap leading here, but so good. Because of bank holiday, we're in discount, and it is not so expensive to buy. And we could buy, take this low. We don't want to, we don't have any confirmation for buys here. At that point, I start feeling like I'm on the wrong side now of the market. Because literally, this has put in a reversal signature. We've been bearish, been so bullish for the day. If we don't even reach even, we use it for higher prices, means the whole week will be bullish. Do we start to change from here? Then we look in the large range Monday. Tomorrow will be low probability Tuesday. Good trades will come on Thursday and Friday. It will be a rangy week if we just go higher from here. I want it to go lower. If Trump didn't choose anything to do. These consolidations, I expect them to support price. If it fail, then further above the inversion, we look for longs. This point, you close all your all your trades. good sign. I think that we, as we have this rejection, and we got below that volume imbalance. More on our to the upside, and we want to come and take them. You see this relative equal highs? Yeah, I would want it to come at least take out all these guys. Even here, we are trapping people to buy. When we take them out, what's the time? 10:30. Want to stop trading at 11, come back at 11:30. Now this shows you that you do not, because you've seen this candle crash into to experience limit orders, can always get it. See how we have dropped people into going long, and so many have gone wrong. So we are to buy. Watch this price level here. We don't want to buy from there and put another. What we want to close below. Should we close below the equals? We are going to see prices. Here, that money was building their positions, building their positions. And they took the market high. And took it high. We're waiting. We stopped reading at 11. This is good when you see that kind of rejection. When the next kind of close draw, don't want this. Don't want. We want them to start dropping heavy because of this immediate rebalance. Sell short on the next candle. Should we close below the opening? Oh, opening gap high. We are creating tails and targets up. Told you when you reached here, expect lower prices. Uh, Interesting sessions. So this has been a great and successful tape reading session. I am satisfied. I'm very happy. I told you when we reach there, we will go and dig deeper because we will not give a chance to whoever bought here because we are here. People who bought here. ICT tells us that once we take this law, wait for it to come up. Now we wait for this law to be taken up before we can what? Buy more. This has been a very wonderful session. what was the logic behind this session? One, we took London buy side. It is low here. This is London buy side. I'm gonna magnify it here. Now we wait for the candle that takes London buy side to be taken out. Okay. Once it is taken out, we mark this inversion after that buy side. Now once that is done, we watch price. How does it behave? And you can always sell as long as there's a body candle closure below the London buy side. So this will act as support. Oh, if you don't sell that, this high here, you want to wait for body candle closure below here. And you want what? Sell short here. And if you don't short there, you wait for body candle closure below the past presented fair value gap, wait for retest and sell short, which was this idea. If you're on the right side of the market, price action should not go above this first presented fair value gap. Okay. And when we look at from electronic to regular trading hours, we had so much. We had so much. This is where we closed from. Okay. And this is where we are. Deep up here in what? Premium. So it doesn't make sense for us to keep buying, sorry. So that is all the logic behind. You combine all the concepts and you bring them together so that they can make what? A logical sense. And now our target today is to buy after we have taken out at least the London high and then lows. And when we look at this price action, we see all this, this, this is all sell side. Okay. If you're satisfied with the trade, you can exit from there. But of course, we will expect some at 11 retracement to take out the first low of 10 a.m. So our target is here. Final target. Putting back our things, we could return from this inversion of fair value gap of 1 hour. That is the logic behind that. The successful tape reading. Now, once you have that, you stop trading and wait for the next day. Or you first leave the charts and come back at 11:30. Because right now, what's gonna happen is we take this high, tap here, and come and take out this sell side. We don't know what will happen. Okay, but our target is midpoint of this opening range gap. When we measure from here up to here, this is our target right here. We want to target price up to here. For today, before we do anything here, target for price, which is below the Asian lows. You can hold, but I'm not holding. Once I make some money, go do other things. So let me remove this. And I told you that when we take this low, we will move at least one standard deviation below that low. Because we have created all this sell side here, buy side here, which we can always target later. Okay? And how do we know we are going lower? Look at each candle, still going lower. And every time we take buy side, we expect it to support price. Here we have reached Asia, buy side, we have reached daily fair value gap high, and this minor sell side has been taken. So here, and we have reached, when we reach 11, We expect a retracement up to at least this high, or depending. That is the whole logic. Because we could not buy in this session, that's why we're looking for sales. Because it was too expensive. Buy. And that's it for today. Hope you learned something.